REITs are really exciting
Yeah.
because
Right.
rather than having that massive down payment and all the, anxieties and stresses of being a landlord,
Well, yeah.
they offer a way to become part owner of properties,
Excellent.
and then get that passive income through dividends.
Nice. So it's like a taste of property ownership without the full commitment.
Exactly.
Oh, I like that. Okay, so no late night calls about leaky faucets. Sign me up. But seriously, how does all this work? What are REITs in the first place?
Okay, so a REIT, or a real estate investment trust, is essentially a company
Okay.
that owns and manages income-producing real estate.
Okay.
So we're talking shopping malls, office buildings, hotels,
All right.
even hospitals and things.
So like the stuff that you actually see around you.
Yeah, exactly. And the key here is that they distribute at least 90% of their net income
Okay.
back to you, the unitholders, as dividends.
Okay, so it's like being a landlord without the actual landlord.
How about the landlording?
I buy units of the REIT,
Yeah.
kind of like shares in a company,
Yeah, just like shares.
and I basically collect rent
That's it.
without having to deal with like tenants and
Exactly.
all that stuff.
You got it.
Okay, I like it. I like it. And is this particularly appealing to certain types of investors?
Definitely. I would say it is very attractive to new investors,
Yeah.
retirees, or anyone who likes that idea of passive income,
Yeah.
without having to do too much work for it.
Yeah, for sure. For sure. Okay, and I know you mentioned something about Malaysia having like a special thing, a 50% gearing limit.
Yeah, that's right. So here in Malaysia, all REITs have a 50% gearing limit,
Okay.
which means that they can only borrow us to 50% of their total assets.
Okay, so it's like a safety net.
It is. It's like a safeguard.
It's like a safeguard. That's true.
Imagine a REIT just goes and borrows a ton of money,
Yeah.
and then suddenly the market crashes.
Mhm.
They're in a lot of trouble.
Oh, yeah, they've overextended themselves.
Exactly.
Okay, so this keeps them from getting too reckless.
Exactly. That's the idea.
All right, that makes me feel a bit more comfortable.
Yeah.
But I gotta ask, are all REITs just about shopping malls?
That's a good question, and that's where it gets interesting.
Okay.
It's not just shopping malls.
Okay.
REITs aren't limited to just those traditional properties.
Okay.
Globally, you find REITs for everything. Shop houses in England,
Okay.
to broadband infrastructure in Taiwan.
Broadband.
Yeah, so anything that kind of generates income through real estate,
Interesting.
whether it's physical or even digital infrastructure.
Wow, that's pretty cool. So broadband is real estate.
Yeah, that's right.
It's a new world.
It is a new world.
All right, well, this is very fascinating, but let's say I'm interested in, exploring REITs a bit further. How do I know if a REIT is actually a good investment?
Yeah, that's a really important question.
Yeah.
And you need a way to analyze them properly.
Okay.
I like to use what I call the KPI method.
KPI method.
Yeah, key performance indicator.
Okay, I like that.
It's like you're the boss of your money,
I am.
so you should have KPIs for the companies that you invest in.
Or like I would for an employee.
Exactly.
I like.
So for REITs, we're looking at things like revenue growth,
Okay.
net profit growth,
Mm-hmm.
with and without valuation gains.
Okay, now why would we look at net profit growth both with and without valuation gains?
Yeah, so that's a really good point.
Yeah.
Valuation gains can sometimes make a REIT's profit look really, really good, especially in a booming market.
Right?
It's like looking at your house price
Okay.
and thinking you've made a ton of money,
Yeah.
even though you haven't actually sold it.
Yeah, that's true.
So you need to see how the REIT is doing based on its actual operations.
So it's like looking beyond the smoke and mirrors,
Yeah.
making sure that the growth is real and it's sustainable.
Exactly.
Okay.
Not just like a temporary illusion.
Yeah, for sure. Okay, so can you give us an example of how this might play out in the real world?
Yeah, definitely. So let's look at two popular REITs here in Malaysia,
Okay.
Axis REIT and IGB REIT.
Okay.
Axis REIT, for example, might show pretty good revenue growth.
Okay.
But when you look at the net profit growth without those valuation gains,
Oh.
it tells a slightly different story.
Okay.
And then when you look at the gearing ratio,
Yeah.
although it's within that safe 50% limit,
Yeah.
it's still a bit higher than IGB REIT.
Okay, so maybe not the most stable ship in rough seas.
Potentially not.
Okay, so what about IGB REIT then? How does that look?
So IGB REIT has consistently shown stronger net profit growth,
Okay.
even without those valuation gains.
Yeah.
And the gearing ratio is lower.
Nice.
So yeah, they have a bit more wiggle room.
So IGB REIT's coming out on top.
Yeah, potentially.
But does that automatically make it a better investment?
Well, it's not quite that simple.
Okay.
It's just two examples.
Right.
And the best choice for you Really depends on your goals.
Your individual goal.
Exactly.
Okay. All right. So it's about finding the right fit for your own journey.
Yeah, exactly.
Okay. But this KPI method seems very valuable
It is.
because it helps you compare these different REITs,
Exactly.
apples to apples.
Apples to apples.
Now let's zoom in on a specific REIT that you're probably familiar with, Sunway REIT.
Yeah.
They're a pretty big player in Malaysia, right?
Yeah, big player. They're known for their diverse portfolio and impressive growth.
Okay.
So when they launched their IPO back in 2010, they had 8 properties.
Okay.
Fast forward to today, they have a portfolio of 17 properties, worth over 8.5 billion ringgit.
That's a lot.
Yeah,
From 8 to 17.
exactly.
Wow, talk about ambition.
A lot of ambition.
So what kind of properties are we talking about here? Are we just talking about shopping malls, or is there more to it?
No, it's not just shopping malls.
Okay.
They have shopping malls like Sunway Pyramid,
Okay.
Sunway Carnival.
Yeah.
They've got hotels like Sunway Resort and Spa,
Nice.
Sunway Putra Hotel,
Okay.
office buildings like Sunway Tower,
Mm-hmm.
and even the Sunway Medical Center.
Wow, so they really have a piece of every pie.
Yeah, it's like a mini city
Okay.
within a city.
And they're all concentrated in Sunway City itself.
A lot of it is.
So are they just kind of sitting back, enjoying their success, or are they still hungry for more?
No, they're always looking for more. They're not done yet.
Right.
They've got plans to further expand Sunway Carnival Mall,
Okay.
and they're actively looking for new opportunities.
So they're always on the lookout for the next big thing.
Always.
That's a good sign for investors, right?
Yeah, it's a really good sign.
It just shows they're not content to just sit still,
Yeah.
collect rent.
Exactly.
Okay, so it sounds like their growth story is far from over.
Yeah.
But growth is only part of the picture.
Yeah.
Let's dive into what really matters to investors.
Okay.
Financial stability.
Let's do it.
Show me the money.
All right. So if you look at their financials from 2012 to 2019,
Okay.
you see a really clear upward trend in revenue,
Okay.
net property income,
Mm-hmm.
and most importantly, distributable income.
That's the money that goes back to us.
Exactly. That's the money that comes back to you
Okay.
as dividends.
Nice.
So it's consistent, it's profitable.
So a steady stream of profits flowing back to the unitholders.
That's what we like to see.
Okay.
That's the goal.
But I'm guessing 2020 threw a wrench in the works
2020.
with the pandemic and everything.
Yeah, 2020 was a strange year for everybody.
Yeah.
And Sunway REIT did feel the impact their DPU dropped.
Okay.
But it seems to be more of a blip than a long-term trend.
Okay.
But what was really reassuring is that they maintained a low gearing ratio.
Okay, so even in the face of a global pandemic,
Yeah,
they held their ground.
they did.
Okay, that speaks volumes about their resilience and their, financial prudence.
Absolutely.
Like they were prepared for a rainy day.
Yeah, they had that cushion.
Okay, I like it. I like
So
it.
yeah, it shows they've got a strong foundation.
Yeah.
And they're able to bounce back from challenges.
Okay, but numbers on a spreadsheet are only part of the picture.
That's right.
Let's move beyond the financials.
Yeah.
And look at some other key insights, starting with occupancy rates.
Occupancy rates.
Is that just like how full their properties are?
Yeah, how full are the properties?
Okay, like how many shops in their malls are actually rented out?
Exactly. Yeah, so imagine you're walking through a mall
Okay.
and it's half-empty shops are boarded up.
Yeah.
Not a good sign.
Yeah.
Suggests that they're struggling to attract tenants.
Yeah.
Which means less rental income for the REIT.
Less money for everybody.
Exactly. But Sunway REIT has consistently boasted high occupancy rates.
Okay, so their properties are like buzzing with activity.
Yeah, lots of tenants,
Lots of shoppers.
lots of shoppers.
Okay, so that sounds like a healthy sign.
It's a really good sign.
Okay, but high occupancy rates alone aren't enough, right?
That's right. They've also done a really good job with tenant diversification.
Tenant diversification. So it's not just about having a lot of tenants, it's about having the right kind of tenants.
That's about the right kind of tenants.
Okay.
Yeah, imagine a REIT with a mall that relies on a single anchor tenant,
Okay.
like a big department store,
Okay.
and then that department store goes bankrupt.
Oh, no.
Suddenly, a huge chunk of the REIT's income gone.
So Sunway REIT is mitigating that risk.
Exactly, by having a diverse mix of tenants.
So if one tenant falters,
Yeah,
doesn't bring the whole house down.
exactly.
Okay, I like it spread the risk.
Spread the risk.
Now, what about lease structure?
Lease structure.
What is that?
So this is about understanding the terms of agreement
Okay.
between the REIT and the tenant.
Yeah.
Sunway REIT has a really good balance between short-term and long-term leases.
Okay. And why is that balance important?
Well, their malls typically have shorter leases,
Okay.
which gives them flexibility to adjust rents. as the
Oh,
market changes.
I see. So they can adapt to the
Ex-
market.
Exactly.
And if an area suddenly becomes super popular,
Yeah,
they can kind of capitalize on that.
exactly. So they can increase rents.
Okay. What about those longer leases?
So that's where their university and hospital industrial properties come in.
Yeah.
These tend to have much longer leases,
Yeah.
which provides like a guaranteed income stream for years to come.
Okay.
So it's like a really solid foundation.
So it's like they have that mix of agility and stability.
Yeah.
Short-term leases, they can be nimble,
Yeah,
responsive to the market shifts.
that's right.
Long-term leases give them that predictability.
Exactly.
All right, a smart strategy.
Very smart strategy.
Okay, so we've covered a lot about rates
Yeah.
and Sunway REITs specifically.
Yeah.
But I know what you're thinking.
What am I thinking?
You're thinking, is it a good investment?
Yeah. The question.
That is the million-dollar question.
The million-dollar question.
We've looked at the numbers.
Yeah.
We've peeked behind the curtain.
Yeah.
But does Sunway REIT have what it takes to help me achieve my property ownership dreams?
Good question.
Right.
That's where it gets personal.
Right.
And while I can't give financial advice,
Yeah, of course, of course.
what I can do is give you the tools to make an informed decision.
Okay.
So let's recap what we've learned about Sunway REIT and see if it aligns with your investment goals
Okay, I like it.
and your risk tolerance.
All right, sounds good. Let's do it.
So we've seen that Sunway REIT has this really diverse portfolio,
Yeah.
strong financial performance and a proactive management team.
It does sound pretty promising. But, I mean, let's be real. No investment is without risks, right? What are some of the potential downsides investors should be aware of?
Yeah, of course. One thing to consider is that a large chunk of their portfolio
Yeah.
is concentrated in Sunway City.
Okay, so that mini city approach.
Right, exactly.
So is that a good thing or a bad thing?
Well, it's kind of a double-edged sword,
Yeah.
On one hand, it gives them a deep understanding of that local market,
Yeah.
and they can leverage those synergies between their properties.
Okay. Yeah, that makes sense.
But on the other hand,
Yeah.
it makes them more vulnerable to any economic downturn
Okay.
that hits that specific area.
So if like something happens in Sunway City, like,
Yeah.
I don't know, a big infrastructure project that goes wrong or
Yeah.
people's preferences shift,
Yeah,
they're going to feel those ripple effects more acutely
exactly.
than a REIT that's spread across different regions.
Exactly.
Okay, so geographical concentration risk.
Yeah, geographical concentration risk.
Okay, got it. Another thing I'm thinking about, and I'm sure a lot of our listeners are thinking about this too,
Yeah.
is the rise of online shopping.
Yeah, online shopping is a big one.
Will malls become ghost towns as we all just shift to buying everything online?
Yeah, it's a concern.
I mean, this is a little unsettling to someone like me who's considering REITs
Yeah.
as a pathway to property ownership.
Yeah, I understand.
Yeah.
The retail landscape is definitely evolving,
Okay.
but I wouldn't write off malls just yet.
Okay.
They're adapting.
Okay.
They're offering experiences that you can't get online.
Okay.
Things like entertainment, dining,
Okay.
social gatherings.
So it's not just about buying things anymore.
No, it's an experience.
It's about going and experiencing them.
Yeah,
Like, I might buy a new outfit online, but I still want to go to the mall to have coffee with friends.
exactly.
Yeah, try on shoes in person.
Yeah, you go to the mall to see the new things,
Exactly, yeah.
and you buy it online.
Exactly.
So yeah, REIT managers are recognizing this,
Okay.
and they're transforming these malls into lifestyle destinations.
Okay.
Yeah.
So diversification not just in terms of property types,
Yeah,
but within the retail space itself.
exactly.
Okay.
So, bringing in cafes, gyms, co-working spaces.
So creating a vibrant ecosystem
They-
that
they-
draws people in
Yeah,
for more than just shopping.
exactly. That's the idea.
Okay, so we need to put on our detective hats here.
Put on your detective hat.
Look for clues beyond the balance sheet.
Yeah.
Understand the story,
The why.
the why behind the numbers.
The why.
Okay, now let's talk about something that's not quite as exciting,
Right.
but it's a crucial aspect of REIT investing.
Yeah.
Taxes.
Tax is everybody's favorite.
Yeah, well, I mean, they're kind of the unavoidable reality
Yeah, it's part of life.
of any investment journey, right?
It is.
But let's break it down. What do I need to know about taxes when it comes to REITs here in Malaysia?
All right, so the main thing to understand is withholding tax,
Withholding tax.
which is basically a portion of your dividend income
Okay.
that gets deducted at source
Okay.
and paid directly to the tax authorities.
So it's like a prepayment on my taxes.
It is. It's like a prepayment.
Okay, is it a big chunk of my dividends?
Not really.
Yeah.
So for individuals who are tax residents in Malaysia,
Okay.
it's currently 10%.
10%, okay.
Yeah. And the good news is the REIT manager takes care of paying it.
Okay, so I don't have to worry about filing any extra paperwork.
Yeah, exactly.
Okay, what if I'm investing through a company or I'm not a Malaysian tax resident?
Then it might be a bit different.
Okay.
So it's always best to check with a tax professional.
To get the specific details.
Exactly.
Okay, all right, but here's where it gets interesting.
Okay.
REITs actually have a special tax advantage.
Oh, they do.
As long as they distribute at least 90% of their taxable income
Yeah.
to unit holders like me,
To unit holders.
they don't have to pay corporate income tax at the company level.
That's right.
So they get a tax break. If they pay out most of their profits to investors,
Exactly.
sounds like a win-win.
It's a win-win.
Okay, so not only do I get this potential stream of passive income,
Yeah,
I also benefit from a tax-optimized structure.
you do.
I'm starting to see the appeal of REITs, but how do they actually fit into a larger investment portfolio?
That's a good question.
Should they be the main course or more like a side dish?
Yeah, so it depends on your goals
Okay.
and your risk tolerance.
Mm-hmm.
REITs can be a valuable addition to any portfolio
Okay.
because they offer that blend of stability
Okay.
and growth potential.
Right.
They tend to be less volatile than stocks,
Okay.
especially when things are a bit uncertain.
So they can act as kind of an anchor in my portfolio.
Yeah, like a nice stable base.
Okay.
Yeah.
Providing some ballast
Yeah,
when the seas get rough.
exactly.
Okay.
So you can get that income
Yeah.
even when other things are struggling.
Yeah, for sure. And because REITs are backed by real assets,
Yeah,
like those malls and office buildings that we talked about,
exactly.
they offer a hedge against inflation.
Yeah, because as everything else gets more expensive,
Yeah.
the value of those properties should go up as well.
Exactly. So it's like a built-in inflation protector.
Exactly. That's
Yeah.
what we want.
Okay.
But remember, diversification is key.
Don't put all your eggs in one basket,
Exactly.
even if that basket is filled with REITs.
Even if it's filled with REITs.
Okay, so REITs should be one piece of my investment puzzle,
Yeah,
alongside stocks, bonds, maybe even some direct property investments down the road.
exactly.
Okay, it's about finding that balance.
Yeah.
All right, now how do I actually know if a REIT is a good deal?
Yeah.
How do I assess its value?
So one way to do this is to look at its distribution yield,
Okay, distribution yield.
which is basically the annual dividend payment
Yeah.
divided by the REIT's unit price.
So it tells me how much income I'm getting
Yeah, how much income are you getting?
for every ringgit I invest.
Exactly.
Okay, does that mean a higher yield is always better?
Not necessarily.
Okay.
You have to consider the quality of the REIT
Yeah.
and its growth prospects.
Okay.
So sometimes a lower yield
Yeah.
might be justified
Okay.
if the REIT has a great track record,
Okay.
a strong management team,
Mm-hmm.
and, is well positioned for the future.
So you get what you pay for.
You get what you pay for.
Okay, I'm thinking back to the KPI method we talked about earlier.
Yeah.
It's not just about chasing the highest yield. It's about understanding the underlying fundamentals.
Exactly.
Okay, now, remember, our goal here is to potentially own properties someday.
Yeah.
Can you talk a little bit more about how REITs can help us along that path?
Yeah. So think of REITs as stepping stones,
Yeah.
You get to participate in the real estate market
Yeah.
without those huge upfront costs.
Yeah.
The headaches of ownership.
Right, so it's like a real estate training ground.
Exactly.
I can learn the ropes,
Blur the ropes.
gain some experience,
Get that experience.
and generate some income along the way.
Exactly.
And who knows, maybe those dividends can even help me save up for that down payment
Yeah, that's the dream.
on my dream property.
That's the dream.
Okay.
And don't forget about the power of compounding.
Compounding, the eighth wonder of the world.
Exactly. Reinvest those dividends,
Yeah.
get more units,
Yeah.
and it'll grow exponentially.
I like it, but you're highlighting something here too.
With that,
Patience is key.
patience is key.
REIT investing is a long game.
A long game.
It's not a get-rich-quick scheme.
No, definitely not.
Okay.
If you want quick returns,
Yeah.
this is not for you.
Yeah, for sure. For sure.
But if you're in it for the long haul,
Yeah.
this is where it's at.
All right. So what are your thoughts on the current REIT landscape in Malaysia?
Good question.
Is it a good time to be diving in, or should I be proceeding with caution?
Well, the market is always changing.
Yeah.
And there are always opportunities.
Yeah.
But you have to be aware of those current conditions
Yeah.
and the risks.
Like what kind of risks?
So one thing to consider is rising interest rates.
Okay, interest rates.
They can make REITs less attractive.
How so?
Well, their dividend yields
Yeah.
might not be as competitive
Okay.
compared to other fixed income investments.
So it's a constant dance
It is a dance.
between REIT yields and interest rates.
It's all connected.
Okay.
Another thing to consider is the potential for oversupply.
Oversupply.
Yeah. particularly in certain areas.
Well, you did mention earlier there's been a lot of construction,
Yeah.
especially of office building,
It's lots of office buildings.
shopping malls.
Yeah.
Could that lead to lower occupancy rates
Yeah, potentially.
and impact REIT profits?
Exactly.
So it's not just about investing in any REIT.
No.
It's about finding the ones that are well-positioned,
Yeah.
strong tenant base,
Yeah.
and are managed by a team that's adaptable and forward-thinking.
That's what we want.
Okay, so REIT investing
Yeah.
requires some homework.
Do your research.
A lot of common sense
Yeah.
and a good dose of patience.
Patience is key.
Okay, well, we talked about Sunway REIT's low gearing ratio
Yeah.
during the pandemic.
Yeah, that was impressive.
Really showcased their resilience.
Yeah.
What are some other characteristics that make a REIT resilient?
Okay, so a resilient REIT
Yeah.
is like a well-built house.
Okay.
It can withstand those strong winds and heavy rains.
Yeah.
Because it's got a strong foundation.
Okay, so what are the building blocks of a resilient REIT?
So think diversified portfolio,
Okay.
high occupancy rates,
Mm-hmm.
strong tenant relationships,
Okay.
and a conservative financial strategy.
So it's not just about the types of properties,
Right.
it's how they're managed
That's
and the
nice.
relationships with the tenants.
It's all connected.
Okay, and speaking of diversification,
Yeah.
we talked about diversifying across different asset classes.
Yeah.
But what about diversifying within the REIT sector itself?
Yeah, that's a great point.
I mean, we've mainly been focusing on retail REITs like Sunway.
Yeah, mostly retail.
Are there other types of REITs I should be exploring
Yeah, absolutely.
to create a safety net for my investments?
Yeah, you don't want to put all your eggs in one basket.
So even if I believe in the future of malls,
Yeah.
I should still spread my bets.
Spread your bets.
Consider other options.
Exactly.
Okay.
So think about things like industrial properties,
Okay.
healthcare facilities,
Hmm.
data centers.
Data center.
Yeah.
Interesting.
Even self-storage units.
Wow. The world of REITs is more diverse than I thought.
It's a big world out there.
It's like a buffet of real estate opportunities.
It is a buffet.
But with so many choices.
Yeah.
How do I know which REITs are the right fit for me?
Yeah.
How do I cut through the noise and make those informed decisions? Yeah, it is a bit overwhelming, like stepping into a giant mall
Yeah,
and not knowing where to start.
exactly.
But I guess that's where our trusty KPI method comes back into play, right? Exactly. So remember those key metrics.
Revenue growth, net profit growth gearing ratio.
Yeah, all those good things.
They can help us cut through the noise.
Yeah, give you a good comparison point.
Okay, so those KPIs are like our compass,
Yeah,
guiding us through the REIT jungle.
exactly.
But beyond the numbers,
Yeah.
what other qualities should I be looking for?
So look for a REIT with a clear strategy.
Okay.
Do they have a niche focus,
Okay.
geographic expertise?
Yeah. Are they just buying anything or are they being very strategic?
Yeah, are they thinking about it?
Okay.
So
So it's about understanding their game plan,
yeah, what's the plan?
their vision for the future.
Yeah, where are they going?
Are they playing checkers
Yeah,
or are they playing chess?
big difference.
Big difference. Okay.
Yeah, we want the chess players.
So how do we actually measure the performance of our REIT investments?
Yeah, good question.
How do we know if our strategy is working?
So there's a few key metrics.
Okay.
One to look at is dividend growth. Okay, so are my dividends actually increasing?
Exactly. Are they going up?
Okay, it's not just about getting a dividend.
No.
It's about seeing that dividend grow.
It's about that growth.
Okay.
Another one to look at is net asset value growth.
NAV.
So that's the underlying value of the REIT's assets,
Okay.
minus its liabilities.
So it's kind of like seeing the value of my home go up,
Yeah,
except it's a whole portfolio of property
exactly. It's a portfolio.
working for me.
Yeah,
And is this reflected in the unit price of the REIT?
it often is.
Okay.
So you should see that unit price going up over time.
All right.
And then there's total return,
Total return.
which includes both the dividend income
Okay.
and that capital appreciation.
So that's the big picture.
That's the big picture.
How is my investment doing?
Exactly how well are you doing?
Okay.
So it combines those two things.
So it takes into account the income I'm receiving
Yeah,
and any increase in the value of the REIT units themselves.
exactly. So that gives you a comprehensive measure.
All right, so total return is a comprehensive measure of how well my REIT investment is doing.
Yeah.
Okay, but remember investing in real estate.
Yeah.
This is a marathon,
It is a marathon.
not a sprint.
Definitely not a sprint.
So I shouldn't expect to get rich quick with REITs.
No, you need to be patient.
Patience is a virtue.
It is a virtue.
All right, so REITs are more about the slow and steady.
Yeah.
Long-term growth.
Long-term.
They're the building blocks for my financial future.
That's it. Building blocks for the future.
All right, I like it. I like it.
Steady income, potential appreciation.
Okay, so they're not a set it and forget it kind of thing.
No, definitely not.
I need to stay informed.
You need to still inform.
Make sure that they're on track.
Yeah.
So how do I do that?
So make sure you read their annual reports.
Okay.
Pay attention to industry news and trends.
Stay up to date.
Yeah, stay up to date and monitor those key metrics.
So I need to be an active participant
Active participant.
in my REIT journey,
Exactly.
not just a passive observer.
No, you're in control.
Okay, knowledge is power,
Knowledge is power,
especially when it comes to investing.
especially when it comes to investing.
Well, this deep dive into REITs has been eye-opening.
Glad to hear it.
We've explored what they are, how to evaluate them,
Yeah.
the importance of diversification resilience, even those pesky tax implications.
We covered a lot.
We covered a lot, but we connected those dots between REITs
Yeah.
and your ultimate goal of owning property.
Yeah.
It's not just about abstract investments.
Yeah.
It's about taking those tangible steps
Yeah.
towards your dreams.
Exactly.
Now it's time to put what you've learned into action.
Yeah.
Explore different REITs, compare their KPIs, read those annual reports,
Do your research.
see what aligns with your goals.
Yeah, what's right for you?
You've learned how to analyze a REIT like Sunway.
Yeah.
Now go out there, explore the market with confidence.
Yeah.
Picture yourself walking through Sunway Pyramid or any other mall. Observe the fit traffic, the
Yeah.
types of shops, the overall vibe,
Yeah.
which REIT feels like a good investment to you.
It's your money.
It is my money.
Right.
It's not just about the numbers.
No.
It's about finding investments that resonate with you and
Yeah.
align with your vision for the future.
That's it.
So go out there, explore, analyze, discover the world of REITs.
The world is your oyster.
It is.
Yeah.
Maybe you'll stumble upon a hidden gem that helps you pave the way
Yeah.
to owning a piece of the Malaysian property market.
Exactly. That's the goal.
All right, we've given you the map and the compass.
Yeah.
Now it's time to embark on your own REIT adventure.
Good luck.
Happy investing.